Jay's gonna do the big reveal. I can tell. He's about to. He's just gonna.
don't get excited. It's not that big.
That's what she said.
Welcome to Drunk Real Estate. Grab a drink and enjoy the show.
Hey there, welcome to this special Olympic edition of Drunk Real Estate, episode number 58. I am Kyle Wilson, Ashley Wilson's husband, and Mauricio, obviously the biggest Olympic fan ever. How's it going, man?
It's going great. I feel a little underdressed, though, I must say. I'm a little underdressed. I'm wearing a regular shirt here, and my buddy AJ over here is looking like a runway model over there. Freshly cut. Look at him.
He does look good. He does look. Wait, is that a black watch band though with a brown belt? I see.
Hey. I know.
That way, I take all the compliments I gave you pre-show are going to be eliminated based on that observation. That is a faux pas.
Total faux pas. I dropped the ball. I apologize, guys.
Mauricio, what are you drinking tonight?
I'm going back to my roots. I'm doing a little vino action since I've been getting so much crap from you about the piss cola. So I'm doing the La Crema, which is kind of a staple at the Rauld household, except this is a Monterey version as opposed to Sonoma. So it's a little bit different, but it's actually quite tasty. And it's certified sustainable. That's almost like Costco, but it's not from Costco. It's from a legitimate place, but it's delish. I like it.
It's very liberal of you. Jay, how's it going?
Good. How do you like my shirt? You know where this came from? Oh, yeah.
Five Below?
No, Costco.
Looks good, buddy. We like it. What are you drinking tonight?
So I was worried you guys were going to bore the hell out of me, so I needed some coffee tonight. I was a little tired, and so made myself some coffee. Then I made a mistake. I grabbed this thing of Kirkland Costco Irish cream liqueur, and I went to pour a little bit in. And you guys, I don't know if you guys saw it. I think I probably got it on video. See if I can get Dave to put it in. But I poured like half the bottle into my coffee accidentally. So I'm going to have fun tonight.
Nice. AJ, how's it going, man?
Back to the classic, dude. I'm going back. I got my red cup, my fountain Diet Coke. I'm going back to my roots, and I feel good about it.
And when you say roots, by the way, it sounds like you're like looking like the most interesting man in the world. That's kind of what I'm feeling, the vibe of the most interesting man in the world. Just not enough gray on your hair, but you're looking so freaking sharp, man. I'm impressed.
Actually, AJ, has anyone ever told you look like Conor McGregor?
Thank you, Kyle, for bringing that up. After I've been complimented so many times on that today. Actually, I don't know if that's a compliment. I should probably think about that first.
It's the crooked nose.
It's a crooked nose, and it is because my nose has been broken from boxing. So
it just hit me. The reason you're wearing the suit is because you can finally fit back into it. You've lost so much weight that it finally fits you.
You know what? I like it. That's a great compliment. But thank you, man. Mauricio, I'm going to send you something. It's making me feel good today. Woo!
It's all those Diet Cokes, they're very slimming.
Exactly.
Well, I was going to try and lie to everyone and say that I was in Paris, but no one took the bite. So I'm actually in Canada at my parents' place, and I figured my parents' basement, back to my roots. And I figured my dad would have some Canadian beer in the fridge, and I just didn't think about it. And then I went in there and I couldn't. The only thing I could find is this Moosehead Radler. So that's what I'm drinking. I wanted to keep it Canadian.
Is that an alcoholic beverage?
Yeah, it's a malt beverage beer. It's got alcohol. It says it on the front, 4.5%. It's like a light beer. Anyway, that's what I'm rocking. For anyone who is interested, for the 23 people who are interested, I think what it was, at the end of this show, instead of a top 10, Mauricio, we're canceling the top 10.
Finally. That's a lot of lobbying.
Instead, we're going to go with the drawing of the 10 people who are participating in the Drunk Real Estate Fantasy Football League. So that's going to be listed. So stick around for that, or just skip ahead to it, because I know everyone loves the top 10 and just skips to it anyway. So that's what we're doing.
So that means now 23 out of our usual 25 listeners are going to watch all the way to the end. That's amazing.
Incredible.
It'll be great. All right. Should we get into this? Got anything else? Any other housekeeping? Okay. So we did a full economic update last week. but there was also a couple key reports at the end of this week. And if you're watching this on Wednesday when this comes out, there's also a Fed meeting happening. Not a lot really expected to change in the Fed meeting, but we thought we would sneak in just a little mini economic update, and it wasn't big enough for Jay. Jay only wants to do big economic updates. Like he wants all the credit for all these.
I don't want to
big
bore
updates.
our listeners by talking about the exact same thing every week.
So we decided that AJ would take over the mantle and just give us a quick little update before we get into the topics of the day. So AJ, take it away.
Yeah. So really, I think we're looking at whether the Fed's going to hold rates or not, judging by what's been going on. And there's a few things that they're looking at, and core PCE has held strong below 3% this year, and June was 2.6, and May was also 2.6. So that's holding really good from the previous 3 months at 2.8, and November of 24, as we remember, it was above 3, but since then it's come down, and so that's one of the big numbers we're looking at. Well, also you have GDP, which is at 2.8%, which grew from the first quarter of 1.4%. But that was very much down from the following quarters. So the question is, are they going to look at some of this new data coming in, and are they going to decide that they could drop rates a little sooner, or are they going to hold? Their plan right now is to start lowering rates in September. Now, with the economic data that we've seen, that the real question is, are they going to veer from that path or not? My assumption would be no, because I don't think there's a reason to. As in, they could probably do it, and a lot of people think they probably should, but I don't think they have a reason to. And so I don't think that they'll do that. Like, if it was something bad, if we had numbers that came in and said, oh, it's either dropping faster, but the status quo, I don't know. Maybe I'm wrong here, but I think if it's the status quo, they like to stick with their plan, and they'll probably go ahead and do that.
You're saying you think they'll cut?
Yeah, in September. I don't think they'll announce anything different. So I think they still have the ability, or with the CPE where it's at now, we're holding below 3. I think they can. And I think that they're going to stick by the plan. We haven't seen a huge spike in unemployment numbers. We haven't seen any.
But it keeps ticking up every time. We're up 4.1 now. So,
but we're not seeing anything fall or crater. It's just slowly going in the direction they want it to. And so I think that will allow them to drop in September, stay with plans. But if I think we saw some more dramatic changes, that's what when I'm looking at this, I'm looking for, are we seeing a big drop? Do we see a spike in unemployment? Do we see something that is wildly out of the projections to go in a way that they feel they need to jump in and do something? And I just don't think we've seen that. And so the Fed likes to stick with the plan most of the time. And so I think that because we're not seeing anything jolt, nothing dropping, but also nothing going the opposite way. We're not seeing unemployment or employment jump and unemployment drop, and we're not seeing GDP shoot up or CPE shoot up. So for me, there's no reason why you would not drop the rates and continue on as planned. Status quo is, I think, what we're kind of looking at as of right now.
Just a quick observation. Then I want to listen. I want to hear. This is more of an observation than anything else. But I'm looking at the odds tracker, right? That says basically, as of today, 95% probability that they don't do anything tomorrow, and like a 5% chance that they cut. But then you go to September, and it shows an 86% chance that they cut. Is that right? Am I reading that right?
It's even higher than that, because you have to consider what's the chance of them cutting twice too.
Yeah, so 86.3 chance that they cut.
Well, so no, actually bigger than that. So if you'll notice, so for those that aren't watching, that are listening to this, basically we're looking at the market's projection of what's going to happen. There's 100% chance, according to the market, of a cut. It's just a question of how big of a cut. 86% chance that it's a quarter point, 13% chance that it's a half point, and then about a 0.5% chance. Some people think that there's going to be a 0.75 point cut in September.
That was my point, though. That was the observation that I wanted to get you guys' take on, that there's right now a 0% chance baked in that the Fed will hold rates the last one before the election. I just thought that was an interesting bet.
Well, and I think it goes, though, to the Fed. So the Fed, unless they have a reason to during elections, they're not changing the course because they don't want to look like they're being politically motivated. So they're like, we set the path.
And that's why, like, this meeting,
it.
he has to come out this meeting and telegraph it a little bit too. Like, he has to say, like, oh, he's going to obviously be a little wish-washy. He's not going to be like, we are cutting, but he's got to make it evident that they are considering cutting this September, because he doesn't want to seem like he's making any pivots based off of how the election is going and what the results are going to be. So he's got to telegraph it a little bit now. And don't forget too, though, like, we don't just have this. Then there's Jackson Hole in August, right? Which is usually where the Fed wants to make all of their like big announcements and big changes and stuff. They like to come out at Jackson Hole and do that. So like anything, I think this meeting today, when this comes out, is going to be a bit of a dud. He's not going to want to announce much. He's just going to go out and kind of just toe the line he's always toed, because any big changes, he's going to want to make that announcement at Jackson Hole.
I was just going to say, I think the Fed, their biggest concern right now is looking back and being accused of making a mistake, because that's what's happened the last couple times. They were accused of not raising rates fast enough in 2018. They were accused of dropping rates maybe too quickly during COVID, even though obviously that ended up being the right decision. They were then very realistically or reasonably accused of waiting too long to raise rates when inflation hit. And so I think their biggest concern right now is they don't want to get behind the eight ball. They don't want to do something that people are going to look back in a year or two and say, wow, they waited too long. And so what is it that they're at risk of waiting too long on? And that's cutting. And the risk of waiting too long to cut is if we're in a downward trend, if things are accelerating, and we don't know right now if things are accelerating, but if unemployment's getting ready to spike up, or if GDP is getting ready to collapse, or if something really bad is getting ready to happen, they don't want to wait too long, because then they're going to get blamed for not being proactive. And so they need to decide at this point, are they behind the curve? Are we going to see like potentially bad things happen very quickly moving forward? And I think a couple months ago, when they started talking about a rate cut this summer, a rate cut in September, it was looking like things were worse than they're looking today. So we saw Q1 GDP that came in at like 1.3%, which was a dismal number. It was much below what was expected. We saw unemployment ticking up 0.1%, 0.2% per month. And so there are a lot of reasons to believe that a couple months ago that by September, things were going to be pretty bad. Now, here we are 2 months before September, and yeah, unemployment's ticked up, but we haven't really triggered that really negative sentiment in unemployment. GDP was expected to be below 2% in Q2 and surprised us coming in at 2.8%. So GDP is holding up better than expected.
Until they adjust that. I don't believe these jobs or these GDP numbers anymore. They're always different and so far different.
Yeah, but GDP hasn't been adjusted that much over the last couple years. And so it's possible that the Fed's going to look and say, we're stable. And do I really believe that? No, I think we're behind the curve. I think we should have cut. But based on what the Fed's done the last year or two, I wouldn't be surprised if they look at the GDP number that came out today, assuming we don't see a big drop in or a big spike in unemployment between now and September, assuming we don't see anything highly negative between now and September, I think there's a chance that they don't cut.
Well, and you got to also look at disposable income is way up. And so is personal income. So personal income's way up, disposable income's way up, but personal savings is down. So, right now there's good things going on in the economy. So even though we do have unemployment ticking up, we're still within a range of normal. We're not, and two, we don't see any mass jumps. We're not seeing there's nothing shocking the system right now. CPE isn't dropping like a rock, right? It's not like they're worried about it. It's not like we're getting anywhere close to like deflationary, product deflationary effects, anything else like that. It's just kind of right around their target, but it's not going above 3. It's maintaining there. So we have.
I'm going to sound like a broken record here, though, and like you have to go back and look when the Fed said originally they were going to cut 3 times this year. That was
originally
the same
said
meeting.
8 times.
Okay, well, I'm going back to the 3 because on when they did the production of 3, they thought it was going to take 3 rate cuts for them to in December be at 2.6% core PCE and 4.0 unemployment rate. We are already at 2.6 core PCE and we are above the 4.0 unemployment rate. And they thought it was going to take 3 cuts to get there. So like that was their mentality that we were going to have 3, we were going to be down at that point. So like, how are they not all of a sudden like saying 1 cut at this point is justified?
Well, it's for a few reasons. First of all, it's the trends. So if you look at the CPE, for example, they have been last year, especially in the fall, when we were going into fall, it was dropping like a rock. And so it was going way down, and we've seen a stabilizing of those numbers. So if the Fed's looking at it and we basically hit the same number since February, it's stabilized just under 3, and now it's 2.8. Now it's stabilized at 2.6, and unemployment is not once again being dramatic. We're not seeing anything shock. It's just steady Eddie goes. They're seeing things go in the right direction. They're seeing things hit those targets and maintain. So that, like, I guess, why would you necessarily need to jump in? Why would you necessarily need to do that? That's what they don't see. They're not seeing that. They're saying, well, fall with those trends. Yeah, we're going to probably have to cut to get this to stop. Like, we're seeing an acceleration of the drop. That's not happening, right? It hit close to their target and it's just now right on. So it actually looks like from a lot of the numbers we're seeing more of an equilibrium. That's not good if you want rate cuts, because you should say at this high rate, we shouldn't have hit an equilibrium. These numbers should still be dropping. They're not. So all of a sudden, if we know those numbers aren't dropping and we don't have a rate cut and we go ahead and give a big rate cut, we're not stopping a deceleration, a drop. We're not stopping a fall. In fact, we might do the opposite and spur it up because we just got to those levels and we're just barely maintaining them. And that's at today's rates. And that's what they're seeing. That's what they're doing, because incomes are still going up, disposable incomes going up, and we have moderate job loss. It's also concentrated within a few sectors. And we're not seeing, into a lot of that is trickled in effect, where you saw a contraction in like tech and different things like that. That's mostly been paired off. So once again, it's not about hitting a target and then we're going to all of a sudden cut. It's about seeing what those cuts would do. And I would agree at this point where they're maintaining, if your goal is to hit 2.6 and we just hit it, and it's not dropping, we're not going below, things like that. I see what the Fed's saying. There's no need.
But the only argument I would make against that is that I think there's segments of the economy where having these prolonged not high interest rates, but higher interest rates is causing stress. Our industry is one of them. Commercial real estate is something that maybe we haven't had a catastrophe, but if this continues and rates don't come down, there's less people going to get bailed out. And I would argue something similar, and I know my buddy Jay will disagree, but I would argue something similar with the banks. The banks underlying all this are having some issues because of the high interest rates. And the longer these things stay higher, the more stress those banking assets occur. Same with the commercial. So it may not be happening right now.
You can add in businesses to that. You can add in tech to that. You can add in the federal government that has to pay or pay interest on their debt. So yeah, everybody's struggling with high interest rates. That's absolutely correct.
Right. So the numbers we talked about it last week, where the numbers may look from a macro standpoint, it's 2.8 or 2.7 or 3.2 or whatever. But when you take deeper into the actual real economy, you do see a lot of stress. And I've got to believe that they're looking at that.
They just don't care as much. Their primary objective is consumers. And they made that very, very clear.
So I know we wanted to keep this quick. So this is the last thing I'm going to say on it. And this is my big concern, just heading into what's already a very divisive political season and election season. If we get to September and we're basically where we are today, which is kind of teetering on whether or not there should be a cut, arguments for cuts, arguments for not cutting, good arguments on both sides. If we get to September and we're still in that place, no matter what the Fed does, half the country is going to start screaming that it's political. And I think we're going to cause a lot more divisiveness. I think it would be better if we get to some point in September where it's obvious where there should be a cut or not a cut. But I suspect we're going to be right where we are today. And half the people are going to say a cut's going to be political, no cut's going to be political, and the Fed's going to be in a really bad situation.
And I think that's why they won't do anything. If they can avoid it, they're going to keep exactly to the plan. They won't change anything unless they have to. And because we're not seeing anything break, we're not seeing anything explode and go up, I think they're going to say, the pain, we get it. There's sectors that are having pain, right? I'm one of them. I'm right there. I'm not saying that doesn't exist. Yep. But two, they are not going to focus on me when they're dealing with individual Main Street people needing food and things like that. And also, to Jay's point, they want to stay out. So if they don't have to, they will not do anything.
Well, 100% of the market disagrees with you, so apparently that's a hot take.
Well,
so we will.
No, we agree with it. They're going to do exactly what they said. They're not going to veer from that path. So they will do a cut in September. But that's what we're saying. They're sticking to the plan, nothing else.
Fair enough. All right. As we said, this was supposed to be a short one, but when we have Jay and AJ on the podcast, it's kind of hard to do short takes. So we're going to do.
If we weren't here, geez, you guys wouldn't even be able to talk about anything.
Yeah, if it was just Mauricio on a podcast, it would be 15 minutes long. We would have covered all the issues, solved all the problems,
and nobody would listen.
Yeah. Guess that's fair. All right, so let's move on to the next subject. Oh, geez, this is Jay's subject again. Okay, so even though that wasn't Jay's subject, he did do a pretty good job of taking it over. It's been a tough year and a half for many real estate investors. So one that's left many people considering whether or not we should stay on this course or pivot to something else. One surprising candidate that has emerged: instead of buying real estate, investors are now buying traditional businesses instead. So Jay, have you been seeing real estate investors making this pivot? And why do you think they're doing that if they are making it?
Yeah, I've definitely seen it, and it's probably the third time in my career that I've seen it. I saw a lot of real estate investors start to, and I don't know if pivot's the right word, because in some cases it's an additional effort. They're not necessarily moving out of real estate to buying businesses, but they're starting to buy businesses in addition to real estate. We saw it, or I saw it back after 2008 during that recession, or during the 2008 recession. Saw it going into 2018, 19, 20, when there was a lot of talk of an upcoming recession and it was difficult to find good real estate deals. And now we're seeing it again, when, again, it's really tough to find good deals and we are potentially going into a recession. A lot of people are starting to make that move into buying businesses. And so it doesn't surprise me. I think the reasonable question to ask is, why are some seemingly super smart real estate investors moving into buying businesses? And should the rest of us be considering moving in that same direction? And so I kind of tried to write down a list of reasons why I think this is happening, and maybe it'll be a good list to help us figure out if we should be doing the same thing. But number one, and this is probably the most obvious, is that for a lot of us in the real estate world, things have been slow the last couple of years, and entrepreneurs like challenges. We don't like sitting back and doing nothing. We don't like sitting back and waiting for the deals to appear. We don't like to just sit on our hands or take a break or go on vacation. We want new challenges. And so when the challenges aren't necessarily rearing their heads in real estate, we start looking for those challenges other places. Secondly, with high interest rates, we've seen that real estate hasn't necessarily generated much cash flow over the last few years. And for those of us who live on cash flow, or those of us who need cash flow to continue to build our businesses and pay our payrolls and do all those other things, sometimes you have to look for cash flow in other places. And there are a lot of businesses out there that are high cash flow, that can generate cash flow in ways that real estate today can't because of where interest rates are. So that's number two. Number three, what I've seen a lot of real estate investors starting to do is buying businesses that allow them to vertically integrate their current real estate businesses. And what I mean by that is they're buying businesses that align with the real estate that they're already doing. So maybe they're running a flipping business and they buy a construction company, or they're buying they run a rental business and they're buying a property management company, or starting a property management company. Maybe they're buying a title company or whatever. But basically, they're buying companies that align with their real estate business to make their real estate businesses either giving them more control or giving them better margins, or whatever it is. So that's another reason. And then what I think maybe the biggest reason for why investors are now thinking about buying businesses is that businesses, in a lot of ways, especially today, can generate better returns than real estate can. So if you think about, let's say, commercial real estate, so AJ, Kyle and I, we buy commercial real estate, and typically what we see is that the real estate we're buying is generating 5-6% cap rates, which means to buy that real estate, we have to pay somewhere between 16 and 20 times the income that the real estate is generating. If a piece of real estate is generating $1 million a year in income, we buy that for 16, 17, 18, 19, $20 million. Some businesses like tech and other innovation companies, you can buy those for about 20 times income as well. But traditional businesses, so if I went out and bought, let's say, a plumbing business or an HVAC business or a roofing business or a property management business, I'm going to buy those at 3 to 5 times net income. So I'm going to spend a whole lot less money to generate the same amount of income to buy a business than I would in real estate. Now, obviously, there are other risks that come with businesses over real estate, but long story short, you can buy a business that generates the same amount of income for a lot less money. In fact, if you buy distressed real estate, you're still going to pay 15, 16, 17, maybe if you can get a really great deal, 10, 11, 12 times income. You buy a distressed business, a lot of times you can buy a distressed business for whatever they made in a year, 1 times income. You might be able to buy it for whatever their inventory is worth. So like literally you buy the business and it's profitable, or it's worth more than you paid for it on day one. And so it doesn't surprise me that good real estate investors who are also good business people, who are also good entrepreneurs, are looking to do something else right now when real estate is difficult to generate cash flow. It's difficult to find deals. It's difficult to keep themselves busy. And so my prediction moving forward is we're going to start to see some larger real estate investors, people in the syndication world, realize that you can syndicate businesses the same way you can syndicate real estate. And we're going to start to see real estate investors who are doing big real estate deals start to do big business deals as well. Is that a smart idea? That's a completely separate discussion. I think we're going to see some real estate investors who might get themselves in trouble trying to do that. But my prediction is that's what we're going to start seeing over the next couple of years.
Yeah, and you know what's a really good business to buy multiple wise are law firms. Law firms will trade at like 1 to 1.5 times revenue, which is really crazy. Of course, you got to be a lawyer to do it, but it's like interesting. But I'm going to attack a little bit different angle because I think part of it could also be the specific demographic scenario that we have today. There's a lot of, as we all know, there's a ton of baby boomers that are retiring these days. And I think that's also contributing to this boom because we always think of baby boomers in context of real estate. I know, for example, a lot of folks are giving up their McMansions and kind of downgrading as they get older. I'm sure that's helped the self-storage industry a little bit because they got a bunch of other stuff they need to store. And you've got residential sort of assisted living deals that are helped through that baby boomer thing. Because I think right now we're hitting the peak of baby boomers retiring. You always hear the 10,000 baby boomers retiring every day. I think 2024 is like the peak of that. But you've also got to remember that all of these baby boomers have businesses. And as they get into their 65 and 70 and they're looking to retire, they're looking to get out. They're looking to sell those businesses and they don't want it anymore. And their kids don't want it. I mean, if you're a 65-year-old retiring person and you've got a laundromat, like for example, is probably one of the ones that I've been looking at. You've got a laundromat. Your kid doesn't want the laundromat. They don't want to put in the effort. So there's just, I think, a huge amount of supply coming online. And I think the multiples, to your point, Jay, are pretty attractive compared to other businesses or actually to real estate. So I think that's one of the reasons you're seeing a lot. And I think that's one other reason you're seeing a lot of these influencers that are popping out these days, like the Cody Sanchez's of the world and the Alex Hormozis. They're all buying businesses. And that's one of the main reasons they're really addressing is there's just the amount of people the amount of businesses that are actually going to come up for sale that ultimately, otherwise they might just call it a day. Like they literally may just take that laundromat and be like, you know what, I'm just going to shut it down. Like nobody wants to buy it. It's not really worth much. And so there's a lot of deals right now. Yes, part of the compared to real estate, it's more attractive, but also because of the baby boomer situation and all these folks retiring and they wanting to get rid of the businesses and their kids don't really want any part of it.
I mean, is this just shiny object syndrome? I guess is my worry about this. Like are we gonna have the exact same thing that happened that got us in trouble with the syndication industry? We had a bunch of people with incomplete knowledge buying real estate, and they got bailed out by the fact that they got in a little bit earlier than some of these other people with incomplete knowledge and buying real estate. And so that drove down the cap rates. Is that kind of, are we just seeing another cycle in businesses? Because as you said, like now we're having these influencers do the same thing that real estate syndicators, the gurus on that were doing, and saying, oh, come take my course and I'll teach you everything how to buy a business. Well, they're teaching you how to buy a business, but just like real estate, they weren't teaching you how to run a business. They weren't teaching you how to, actually dive into the numbers and operate it. And so it's like, are we going to get into that same kind of thing right now? Because, we've bought real estate, we've run a real estate business. How hard could it be, right? Like we're smart people. We should be able to figure that out. I'm hesitant to just dive in all in right away without kind of seeing the end results of those.
And I see that firsthand, by the way. I'm not I'm actually been interested just for many reasons in the laundry mat space. I don't own any, but I've just kind of been educating myself and just kind of curious as to how that business model works. It sounds relatively simple. It sounds like, hey, it's a good cash flowing business, but I'll get on these forums and people are clueless. Like they're literally looking to buy one of these businesses and they're like, oh, is this a good price for this thing? And they're giving all the numbers and the expenses and they have no clue what it really takes to run that business, what the real numbers look like. And so it is potentially that's what's going to be happening is people are getting all excited and seeing good returns, but they haven't taken the time to really educate themselves and doing a deep dive.
It's not as bad as though before we would see a lot of people go from like flipping to buying apartments or like single family homes to buying apartments. And to me, that jump is probably worse than the jump from like syndicating to buying a business, just because we've said this many a times. And AJ and I have said the same thing. Like, when you're buying these large apartments or these large self-storage, you're not buying real estate. You're buying a business that is operating on a piece of real estate. So we already are buying businesses right now. Like that's what we're doing as our job is we're buying businesses. It's just related to real estate. So it's not, we do have a certain set of knowledge. It's just I'm just worried if this is the new shiny object and this is it's going to be the sexy thing and people are all of a sudden, Jay says that one of the number one reasons this is an attractive business is you can get, instead of buying at a 5 cap, you can buy it at a 20 cap basically at 5 times earnings. Like, is that once that goes away, all of a sudden the shiny object syndrome has been caught by everything. That goes down to, well, now all of a sudden businesses are selling at 10 caps. And then all of a sudden businesses are selling at 6 caps. And then we're like, oh, geez, okay. Like we're right back to where we were with real estate. I guess if that's true, maybe we should get in now, buy them at the 20s and then we'll ride the wave.
I think there are enough businesses out there that I'm not too concerned about values getting inflated because random people are jumping in to buy them. I'm not saying it's not going to happen in certain industries. Mauricio, you mentioned the laundromat industry, and that's an industry that I have a friend who's in that business. And for those that don't know, my wife and I were co-hosts of the BiggerPockets business podcast a few years ago. And so we interviewed entrepreneurs and business owners and business syndicators and business sellers and buyers for a couple years. And so it was always interesting getting people's takes. But I remember the laundromat guy that we had on, who I'm friends with, like I said, with the laundromat owner now. That industry really is getting a little bit saturated. But I remember my friend telling me at one point, he said, all these people now, because of people like Cody Sanchez, want to buy a laundromat. And what I tell all those people is go spend an hour in a laundromat before you even think about buying a laundromat, because most of those people have no concept. They think that it's going to be a passive investment, and doesn't matter if they enjoy doing it or what the day to day is actually like. He said, I guarantee you, if 95% of if 100% of those people that wanted to buy a laundromat actually spent an hour in a laundromat, 95% of them would like run away and say never.
Well, yeah, it's the idea that okay, I can get passive income, right? They've got addicted to this idea of passive income, and same thing. They get into real estate and they're like, oh, this isn't passive as I thought it was. What else is going to be a little bit more passive? And then they're like, oh, maybe a car wash. Car wash is more passive. That's another sexy one, or an ATM business, or a laundromat, or all these different things. The idea is that I'm not going to have to do a lot of work. I'll just buy it, do a little bit of setup, and then I could just go on and buy the next one. And once again, it's without knowing it, I'm thinking it can't be as passive as everyone thinks.
It's not. And I think the thing that a lot of people miss is that in the real estate world, let's say you buy an apartment complex. Yeah, there's going to be some work getting it stabilized and doing some renovations. But once it's stabilized, there are companies out there whose job it is to professionally manage that asset, that real estate asset. We have property management companies. And if you can do a good job of stabilizing and you can find a good management company, they come in and they do 95% of the management work for you. Problem is, we don't have the equivalent for businesses. There are no companies that come in and just say, okay, once your business is stabilized, we'll manage your business for you. It's your job to basically build the equivalent of a property management company from scratch every time you buy a business. And maybe if you buy a lot of businesses, you can build a big property management company that manages them all, but you can't just go out to the market and find a management company that's going to allow you to turn your business over on day one and start collecting passive income. You need to build that from scratch. And if I asked most of these people that are going out and building businesses, hey, you think you could build a property management company from scratch? A lot of them wouldn't want to do that. But that's essentially what they're going to have to do in their business if they ever want it to be a passive business.
Unless you're AJ, right? That's AJ was so early on the self-storage front that he couldn't even find companies to go and buy. If I'm remembering correctly, right, AJ? Like you had to go out and you had to create all these different subsidiary companies. And, I guess that's another, Jay, you talked out in the beginning about real estate investors are buying adjacent companies. So, like maybe a construction company or or you just said a property management company or a servicing company or something like that. The alternative is, as AJ did, you just start another company and do it that way.
But I would argue that most people, and AJ, correct me if I'm wrong, but how many thousands of hours have you put into building the management around your companies so that you can essentially extract yourself from them? I assume it wasn't something that was easy for you to do.
No, it definitely takes time. And that's, I think, what people don't understand. I buy companies. I bought another one last month, and I'm under contract to buy another one right now in totally different industries, in the hunting industries right now. And then I've got other ones. I've got 2 software companies. I've got handful of other companies that are in our industry, and service-based businesses. I bought, sold out, did roll-up models, everything else. And really, it's from the back-end infrastructure that I built, because I, first of all, had done mergers and acquisitions. I did roll-ups. And when we were building our companies, it was a necessity for us, and I've always viewed it as a business, meaning that that was literally the tagline of my first book. It's not a real estate asset, it's a business. And what we focused on is we built the back end, and then we purchased and acquired on the front end these assets, and we did a roll-up model like you would see in business. And we had nobody, that the ancillary businesses other people wouldn't do, so we were forced to do it. But as we did that, it allowed us to be a lot more proficient at the core business practices, and then we could align ourselves with businesses that needed those things, and we could get a good values, and we could plug them into our system and turn them around. So that's what we've done. And that obviously crosses over into other industries, like I've already mentioned, that have nothing to do with ours. And some of those have been really good. So we're getting some good deals as of the last couple months. I'll have another one taken over here soon. I know what I'm looking for. I know the value we bring, how to turn them around. And I think a lot of people just think you just buy a business, and it just doesn't work like that. The lower multiple goes to, or lower for a reason. So you buy an attorney firm, that's because you got to do the work.
You can't buy it unless you're an attorney.
Yeah. So all of a sudden then it's like, that's why you only get 1 times or 1.5 times revenue, because what you're doing is you're buying yourself a job. And so when you think of businesses, if you're not buying yourself a job, the multiple is going to be much higher, because now it's moving into a different class and a different asset. Most real estate people think of things as passive real estate investments, third-party handouts. They're not looking at operating actual business functions day to day. And they don't see all the moving parts. And then they buy something at 1.5 times and realize, I just bought myself a job. This sucks. Why did I do it? And then they're not happy about it. So it's a recipe for disaster if you do it that way.
Yeah, it's like the new real estate investors just get into the business and they say, "Oh, I could buy something at a 6 cap, or wait, there's a deal over here at a 12 cap. Why would I buy something at a 6 cap when I can make twice as much money?" They go buy the 12 cap and they realize, "Oh, that's why I didn't want to buy the 12 cap." And for those who don't get that reference, the point is that a 12 cap generates a lot of money generally because it is a substantial headache to manage. It's either in a really bad part of town or very bad tenant base or super, super distressed. And the fact that it generates more cash flow, or you're buying it let's just say you're buying it at a lower multiple, doesn't necessarily mean that it's a better purchase, or it's one that's gonna do better for you than something that you're going to spend more money on.
Right. A, B, C class, right? Like, so A class is going to be a 4 cap, B class is going to be a 5 cap, C class is going to be 6 cap. I mean, that's a gross exaggeration, but it's kind of one of those, like, that A class is going to have a lot less, hands-on work that you're going to have to do because it's brand new. Nothing's breaking. Well, not nothing, but very few things are breaking, and you're going to have very few headaches trying to sell it and show it to potential clients. So it's going to be a lower cap rate.
Yeah, I mean, in business, we look at a lot of different things. First of all, you have growth rates. The infrastructure that you're buying within businesses are going to really drive that valuation. So the infrastructure, the knowledge account, and basically we're talking about obviously an operating model, but then the people that operate within it. That's why you have contract terms, because you have knowledge base. So if I'm buying this, you have to stay on for 3 years. And when you look at lower multiples, first of all, you are getting income that is not only not guaranteed, but it fluctuates. So you have service-based businesses, individual clients, and a lot of that drives by personalities, attorneys, brokers, things like that. I don't like the new attorney because he has a weird beard, right? All that. And the revenue is just gone, right? And so you have very not sticky revenue. But then 2, you have to do the work. You got to be the operator. So what ends up happening is that extra increase in value that you're getting, and by value, all I mean is cash flow. So instead of you're paying for something for 1 times, right? And that's better than a 6 cap. But the reason being is you have to have more cash flow because you have to pay yourself because that's your job. Whereas if you went and hired somebody to run the business, like I'll just hire somebody to run the business. Yeah, now you're buying a 5 cap. And that's even worse because it's not secured revenue. And so where you see the drivers and valuation is the securitization of that revenue and how much the growth rate of it, where it's going. But just because it's going somewhere doesn't mean you can extract it, right? And so businesses are way more complex in those matters, and so are the valuations. When we look at it, we're looking at things like, I'm buying the business that I'm currently buying. We have inventory on hand. I have product sales, our product managers, they have sites, IP, but they do have patents for products. And that is generally a much stickier item. They can't be right? Copied, things like that. And so we do turnarounds like I do on normal assets where I'm buying something, I'm looking for bad business operations, but great products. And let's say, or products or services. Now in real estate, that'd be a great location, but a bad operator. Same thing, except you have multiple layers. And that's why they view businesses as more risky, because the revenue is not nearly as set, right? It's not contracted out. Like if I look at a fourplex, well, I may have a runway of a year where I'm contracted out these rates and I know the people that are in them, they pay every month. It's very set. In a business, it changes daily, right? Or weekly. And if you get a fast growing business, they want to be a paid premium for what's to come. So that's why when you look at software, things like that, they normally grow higher. The faster they grow, the bigger your margins you get. That's the higher return you're going to get on your money. But they want to be paid for that. Basically, you got to pay me to walk away, because if I just stuck around in 6 months, it's going to be worth that much more and you're going to have to pay it to me anyways. So you have to pay those things to run. So if you're buying a fast growing business that has great infrastructure and it's going to yield it and the people know how to extract it, you're going to pay way more than you're going to pay for, a storage facility or an apartment building, because you're paying for future things that are not yet even done. So buying businesses, first of all, are complex for all those reasons, but then two, they're complex by the nature of the niche or whatever it's servicing. Much more single purpose, right? We do something. And if you don't have the skills, the understanding, things like that, it'll fail.
And I think the other thing is that we've gotten so accustomed as real estate investors to a kind of a one size fits all. If you know how to buy a 150 unit apartment complex in Florida, you know how to buy a 150 unit apartment complex in Arizona or Michigan or Maryland or California, because running a 150 unit apartment complex is going to be the same. When you go into a business, even if you buy a business in the same industry, every business is going to be unique. And there's very few rules on what you do after you buy a business. And a lot of it is just experience. A lot of it is having people that know that industry. And so unless you're buying businesses that are pretty much identical to each other in identical areas, every business you buy is going to be a brand new set of challenges. You can't just create a set of systems and processes that might work on your first business that'll work on your second, third, fourth, and fifth. And so I think that's another thing that a lot of people don't realize. They think it's kind of like the franchise model. I'll buy one. Once I get that working, I'll just go buy the second, third, fifth, 10th, 50th, and they'll all be equally easy to run. And it's not necessarily the way it works.
One interesting aspect of this that I've always got is it's like the McDonald's thing, right? Is that the good thing about real estate investors that we're going to understand is the value of the real estate under the business as well. So a lot of people will go out and they'll buy businesses, but they will only buy businesses if they own the real estate as well. And I know it was an example that so my wife Ashley, who a lot of people know here, she does some like one-on-one mentorship stuff. And to Mauricio's point, this whole laundromat stuff, it was someone who was buying a laundromat and they had her look at it. And one of the first questions was what's the lease? Like the lease of the real estate that they currently have, what's the status of that lease? And they were like, oh, it's month to month. So it's great. Like we can make changes. We could do whatever we want. And I was like, that business is worth next to nothing. It's worth the amount of the machines in there, because at any time they could just kick you out and then you don't have a working business anymore. So there's a value in the lease. There's a value in, we know the side of supplying real estate. Now you're flipped on the other side and you're a real estate consumer on that other side. And so you could take that into consideration. You also understand the value of that real estate. So when you're buying a business, you could maybe, offer to or only look for businesses that own the real estate and get both sides of it as well. And then if you want to hand off the business, sell just the business, own the real estate, you could do that as well. So it's a bit of a little wrinkle that I think we would have an advantage as real estate investors in that.
Yeah, I think people need to. I'm not against buying businesses. I mean, again, I've done it before, and I did a podcast on the topic for a couple of years. I'm a huge proponent of it, but I will warn everybody out there that much like if you go to a typical real estate coaching program, 90% of the focus is on finding the deals and finding the money to do those deals. Unfortunately, not nearly enough time is spent on what do you do after you buy it, and that's where the money's made. And that's the differentiator between those who succeed and those who fail. So if you are going to go out and start looking for businesses, if you're going to hire a coach, make sure that coach talks not just about how to find businesses and fund businesses, but also how to operate them on the back end. And make sure that if you're going to buy a business, that you're 100% comfortable with that back end, because it's not cookie cutter.
Fair enough. Kind of got me the itch though, Jay. I kind of want to buy a business with you. We'll see how that works out. All right, we ready to move on? Let's talk some. It's been like almost a full week since we've talked about Donald Trump. So you want to do it again? So speaking of making pivots, let's pivot to this one where former President Trump pivoted on his stance on cryptocurrency. So Trump spoke on his at the annual cryptocurrency conference last week, and he stated that he wants to make America the crypto capital of the world. And he also said that he would like to maintain a strategic crypto reserve, among other things, during a speech. So this is a complete 180 from his previous feelings on cryptocurrency, when he used to say, quote, "It was a crime-riddled scam." So Mauricio, what do you think of Trump all of a sudden becoming one of the crypto bros?
Well, yeah, it's been way too long since we brought up. What was the last episode we did that did not bring up the name Trump? How many weeks do we have to go back before we get there?
He's a good brand guy. He's got everyone talking about it.
There seems to be a direct correlation with the topic of Trump and our ratings on YouTube. It seems to be like a direct correlation with how well this podcast has been doing on YouTube. I don't know how it's doing on the regular podcast, but there seems to be now that's not the reason we picked these topics. Just to be clear, this is actually a current event topic, which is awesome, which is, Trump coming out and talking about the crypto. And I really want to pick Jay's brain here because he's the econ guy, like what really the economic realities or impact of it. But yeah, he came out obviously a couple of days ago. There's the big Bitcoin conference of 2024 in Tennessee. And he came out with an announcement, which honestly, I think it was a kind of a big fat dud, to be honest with you. I mean, a lot of people talk about this whole thing about Bitcoin. The way I read it, it was way below expectations. And let me put it into context. So before Trump went on, RFK Jr. went on, right? He talked about pumping Bitcoin. He talked about his support for Bitcoin. He was a huge supporter, almost like a Trump-esque. He's a huge supporter of Bitcoin. And he said that he actually has most of his wealth in Bitcoin, which I thought was a kind of an interesting statement, because I Googled it, in Yahoo says he's worth $15 million, which means 7, 8, 9, 10 majority of his wealth is in Bitcoin, which I don't know what his definition of that is. But he wanted to come out and say, look, I want to actually build a reserve of Bitcoin. He came out with a number of 4 million Bitcoin as a strategic reserve. Just like we have gold as reserve, he wanted to have a Bitcoin as our part of our reserves. As you know, we have treasuries, we have gold, we have mortgage-backed securities, we have all these things. He wanted to add crypto, or Bitcoin specifically, and he wanted 4 million Bitcoins, which at the time of recording, Bitcoin's trading at around 66,000, give or take. So that's $264 billion. This is RFK, by the way. So RFK wanted $264 billion in Bitcoin, compared to gold, which
how big would be the warehouse to store all that? Just roughly?
Well, luckily, compared to Fort Knox, we wouldn't need anything like Fort Knox, where we have 8,000 and plus tons of gold, which is valued at about $629 billion. By the way, if we're going to do a conspiracy, by the way, can I just make a parenthetical comment right here? This is kind of like, I'm going to go off script here a little bit, but if we ever do actually, we're going to talk about it. I want to talk about it on this segment, but if we're going to do a conspiratorial episode, which we've teased about doing, I want to talk about gold and Fort Knox, because they still use $42 an ounce to look at how much gold they have in the reserves versus the actual price, which is actually $2,400. Why is that? I want to talk about that at some point. Why do they use $42 an ounce when the real price of gold is $2,400? That's going to be great.
You didn't see Die Hard 3? Jeremy Irons stole it all, and he
got it. So anyway, so the reason I say that is that because RFK Jr. comes in like rah, if I'm elected president on day one, I'm going to do this, and I'm going to add 550 Bitcoins per day until we get to 4 billion. Like, this whole thing, right? He argues that we own 19% of the gold's reserves in the world's global gold reserves. I want to do that for Bitcoin as well. I want to have 19% of the Bitcoin reserves. And that's how he came up with this random 4 million. So then Trump comes up and is like, okay, all these high expectations. RFK actually sets him up by saying, look, he's going to come up and basically say the same thing. And he comes in and doesn't really say the same thing and actually falls pretty short, which is one of the reasons I think everybody was kind of disappointed. He comes in and doesn't say anything about having reserves, by the way. He says, let's stockpile Bitcoin, which it really means is like, hey, we already have a couple 100,000 Bitcoins in our system. Instead of selling them like we do now, we get the Bitcoin from all these quote unquote criminals, and we repossess a bunch of this Bitcoin. Instead of selling it, let's stockpile it so we can keep it for our thing. He basically talks about stockpiling Bitcoin. He does not talk about adding it to reserves because number one, he doesn't have the authority to do that. We can talk about that in a second. He wants to fire Gensler, who's the SEC commissioner who's been kind of anti-crypto, which I don't necessarily think that's true, by the way, but he wants to fire Gensler, which he, by the way, can't do. He wants to create a crypto advisory council, which is whatever. And then he wants to block the Fed from ever creating some kind of a digital currency, which again is not something actually the Fed can't even do that right now under current law. But he basically doesn't talk about adding 4 million or 2 million or 5 million or a million or whatever it is to the reserves. He actually leaves that out and just basically comes out with this support for Bitcoin, which, by the way, in and of itself is a major kind of, I think, a major turn. I'm actually think that's the bigger news of all of this, is like him being the first part of a major political party coming out in favor of Bitcoin. In the past, we've had countries like El Salvador and everybody coming up and taking up crypto. We've never had a real major political party candidate. I know there's a lot of pressure now under Kamala Harris, the presumptive Democratic Party, to come out in favor.
Well, because it's a win-win, right? Like, why wouldn't you? Like, it's not like there's like the general population is out there saying like, oh, I'm only going to vote for someone if they, are cracked down harder on Bitcoin. You either love Bitcoin or you just don't own any and you don't really care about it. Like, there's literally no downside to me coming out and supporting Bitcoin. So like politically, I don't see why both candidates aren't saying, oh yeah, Bitcoin's awesome. Cryptocurrencies are
one
great.
of the reasons I would suggest, I would just, again, stop to think about what they're actually arguing. And again, let me go back to RFK's argument of, hey, let's have 4 million Bitcoins, right? Right now that's 264 billion. Where's that coming from? Like, where are we going to get, that's going to be everybody's talking about that's going to have to come from taxpayer money. So taxpayers are going to start investing in Bitcoin, because where else is it going to come from? Like, we don't have 264 billion allocated to crypto. That's either going to have to be new money allocated or taken away from somewhere else. So it's real money if we're going to start accumulating Bitcoin, and you're going to have to sell that to the American people, which is why I think one of the reasons it doesn't.
Well, RFK was probably taking it away from all the wars. That was his thing. We're going to.
You know what's interesting? So let me go back to my conspiratorial, little topic that I want to talk to. So the day after, actually, right after Trump comes up and talks about that, one of the senators, one of the big Bitcoin that favors Bitcoin senators, Senator Cynthia Loomis out of Wyoming, she comes out and says, I'm going to introduce some legislation to basically say whatever Trump is saying, I'm not actually putting it into legislation, because really Congress is the one that actually makes these laws. It's not the president that can just suddenly start making up all these rules. And so Senator Loomis actually did introduce a bill yesterday. We're recording this on a Tuesday, July 30th. I think it was July 29th. She comes up with the Bitcoin Act of 2024, and she proposes nothing crazy like RFK, but $1 million. By the way, this is not going to happen because it's just a bill. Like, it's not going anywhere. But she's proposing $1 million of acquiring Bitcoin, basically 200,000 Bitcoins a year for the next 5 years. So we have $1 million, which is basically only $66 billion. It's not like it's a lot of money. But she wants to do that. But guess how she's going to pay for it? How is she going to come up with $66 billion? She wants to revalue gold from the current book value of $44 an ounce, which is what it's on currently on the books, because they use book value for the value on the balance sheet of the Fed. It's like, I've got 8,000 tons and it's worth 8,000 times $40. We're going to revalue that to fair market value. So it's not really $40, it's $2,400. And that's how we're going to pay magically voodoo math to come up with extra money to go buy all this gold. And again, I don't want to get into the conspiracy theory of the gold pricing right now. But anyway, I think it's interesting, though, and I'll turn it over to you guys. I think it's interesting that the conversation to me, and I've been following Bitcoin for a while, And it seems to me like from really when I started following back in like 2021, 2022, I've seen this like shift from it being something like it's never going to happen, it's never going to be XYZ, to suddenly, even under Gensler, we have a Bitcoin exchange now. This has been legitimized by the regulators. We have an Ethereum ETF, which has been legitimized. And now we're talking about major political parties that are now saying, hey, let's potentially have part of Bitcoin be part of our reserves. I think there's an important shift in public opinion on the whole Bitcoin thing, which that to me is the most interesting part of the story. It's not necessarily the numbers. I don't think any of this is going to really pass. It's got to go through Congress. I just don't see the support on it, but I just think the attitude and the narrative is interesting. How it shifted from there's no way governments are ever going to accept this to suddenly regulations are legitimizing it, and now major political candidates are legitimizing it. What say you, Jay? Come on, Jay. I can see you fuming over there. Like I can see the smoke coming out of your head.
No, this is such, I don't know. It just seems like such a made up issue from a political standpoint to me. And let me start by, I made my first Bitcoin and Ethereum investment in March of 2015. So I was investing in this stuff long before most people had ever heard of it. And I was a huge proponent of crypto. I was a huge proponent of blockchain. I was a bigger proponent of Ethereum because I like the platform. I think it's a much more versatile and useful platform than crypto, which is just a coin. And so for many years, I was excited about it. And what I've come to realize is that the technology is still great, but it's kind of lost favor in the tech world in Silicon Valley. And we haven't done anything interesting with it. And so, yeah, there's a lot of Bitcoin out there, but is it worth anything? It's only worth what we think it's worth. And the reason that a lot of people think Bitcoin is worth something these days is because it is the antithesis of government fiat currency. It is an alternative to government fiat currency. It's a way for us to essentially maintain our independence from government fiat currency if and when we need to do that.
But haven't we always had that with gold?
We have, except that gold is pretty hard if you want to buy a pizza, for you to trade gold for pizza, or if you want to buy
no, that's not true. Now you can kryptonize it, whatever the word is, right? You can take gold and divide it into 1,000 crypto units of whatever.
That's my point. That was the benefit of it, but people liked the fact that it wasn't just ACHing or wiring dollars. US dollars or some other currency. It was independent of the government. It couldn't be tracked by the government. And we didn't have to worry about it being debased by the government, blah, 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 blah. But now when the government starts talking about building crypto reserves and creating legislation around what they're going to do with crypto, suddenly it feels like crypto is now being infringed upon by the government. And maybe they're not going to regulate it per se, but they're going to be involved in it. And my take is that the hardcore crypto folks, the ones that have liked crypto for a long time, not because it's a good thing to gamble with, but because they actually thought that it was utilitarian as an antithesis to fiat currency, they're not going to have any interest because now it's just another currency that's being managed or being hoarded by the US government and other governments, and they're going to start looking for something else. So my take is that, yeah, this is I see no downside to RFK or Trump or any other politician like trying to appeal to the crypto masses and promising them whatever they have to get votes. Nothing wrong with that. Great, do it. But at the end of the day, I don't see any real value here. And if anything, I see a risk. If the government goes out and buys $100 billion of crypto, they now own an asset that's highly volatile and could be worth half that next week.
Yeah, but you can solve. So the question, that's really what I wanted to find. I mean, forget about what are the real consequences? Like, let's just assume that let's have that exercise. Like, let's say, assume this happens and we do start adding crypto to our reserves. So instead of we have treasuries, we have gold, we have mortgage-backed securities, we have crypto now. What does that really mean for us as an economy? How do we do that? I mean, your volatility, to be again, not to get conspiratorial, but like your volatility is like, hey, we're just going to use the book value. We bought it at 40 grand and we're going to use 40 grand. So it's not going to be volatile. It's always going to be 40 grand on our balance sheet, which is kind of what they're doing with gold, which doesn't make sense. But what does that really mean for our economy? If that really happened, is that a good thing for the economy? Is it a bad thing? Is it going to be taxpayer money? Are we basically saying taxpayers are now investing in Bitcoin? Is that what we're saying?
Like, why would they do it though? I guess I don't understand why a government would buy Bitcoin. I mean, we have that whole thing with Germany right now. I guess I don't know if Germany, what they saw, and then now they're selling all their Bitcoin, and like it's a big thing. But like, I don't really see the benefit to the United States. I guess
that's my point.
I get other countries because they're worried about the United States, because the United States, we can manipulate currencies and we have the world reserve currency and all that stuff. But as far as the United States owning Bitcoin, I guess I don't see the benefit to us as a country. And I also don't see, like Trump already said, he's against the CBDC, like the central bank digital coin. Like he's against that, and he will make sure that that will never be implemented as long as he's in office. And so to me, like a lot of people are big on Bitcoin because they're worried about this digital coin. And so like he's already said he's not going to do that. So like it's kind of the fear and why people are buying Bitcoin, some of that's taken off the table. So I see politically why. Like it's as I said before, like there's no downside for him saying he's pro Bitcoin, promising things to the Bitcoin community, because a lot of people are very passionate about it. Like it's a very passionate community, and if you have a someone who owns millions of dollars in Bitcoin and they have one candidate who's going to help protect that investment, they're going to vote for them. So I don't see a downside, but I also don't see the upside for as a country.
The benefit is going to be, and again, I don't want to sound like I'm here supporting the bit. Like I don't, it's just the argument. I'm an attorney. Bear with me. Here's my devil's advocate. But the argument is simply, look, if you look into the future and you fast forward 20 years from now, and gold, for example, is the global reserve. Now everybody's like, all the fiats have gone to shit, and gold is the predominant way that we value things. You're going to want to be the one that has the most gold in the world. Similar with Bitcoin, if 20 years from now, Bitcoin becomes a global reserve currency, you don't want to be the one left out. Like if China comes around, that's what Trump's argument was. Like if China gathers all of this Bitcoin and Bitcoin becomes if not the number one, the number 3, the number 4, the number 2 currency out there. And instead of the euro, it's now Bitcoin, and you don't have any, you're at a huge disadvantage. It's a huge national security risk for you not to have that. If that happens, now you can argue to me that's never going to happen, Mauricio, and Bitcoin's worth nothing. The Peter Schiff argument is worth crap.
It can't happen. I would argue that it can't happen. Why is it that we are no longer on the gold standard? Why is it that we no longer use gold as the primary currency?
People can't print money when it's on gold standard.
Hold on. Yeah. So, Mauricio, do you want to add to that?
Yeah, that's the main reason why governments don't like it, because you can't just manufacture that thin air.
So how much Bitcoin is out there?
21 million, 22 million Bitcoin.
How much? But the point is that there's a finite amount of Bitcoin, and there will always be a finite amount of Bitcoin. And in that sense, it is no different than gold in the sense that it can't be deflated away, and that's the reason why no government in this world is going to want to use Bitcoin as a replacement for their fiat.
But what happens when everybody loses faith in the fiat and everybody starts turning to something alternative asset? Don't you want to have some of that alternative asset? If the marketplace decides, you know what, screw the euro, I don't like it, screw this, and even the United States have been printing so much money, I'm not going to use dollars anymore. I'm going to use this other asset as my currency or as my base.
I mean, yeah, and I get that as a consumer or another country, but as the U.S., as the United States, the fear is usually against the United States.
It's not about them trying to replace it, though. It's about them trying to control it. So they just say there's another currency out there that is not controlled by any government or agency. We might as well be proximity. That's the only thinking. I don't think anyone thinks that a country is going to subsidize it, that they're going to say, this is our new, or not subsidize, but exchange it. This is our new currency. Or even, it doesn't even need to be a top 5 currency or anything else. If it's a major player, the idea of where it's based, rules are regulated, not based, but what country has control over it, or some, because you can't technically have total control. I think that's really, if it's going to happen anyways, try to make it happen here so we at least can have some idea or say around the innovation, how it's moving forward, that we bring forward all the top minds that they come here, that they can help out within our government, understand what's going on, all that kind of stuff. It's about trying to control the future of an industry and a product that they have no control over.
And using that logic, why wouldn't the U.S. government hoard Pokemon cards? Because who knows? Maybe one day in the future, when
because they're not valued at trillions of dollars.
Well, if you have enough of them, okay. Beanie Babies.
Yeah, but you could even just do like precious metals, like, you know, they already do gold. Like, there's other ones that have value in it. Like you just like I don't know. I guess
they store mass gold. I mean,
right. But to Jay's point, I don't think there's a risk of Bitcoin becoming the currency, like, so if you're just saying, oh, we're protecting against it becoming a major player, like the government's rich enough and prints money and whatever, and if they all of a sudden it becomes a major player, they could just buy it later. I guess I just don't see.
No, not protecting against it becoming one, that you are a part of it as it does. The same way as any innovation, you're trying to track the minds.
Right, but why couldn't they just buy it later? I guess it's like why does it have to be now? Like if they want to do it and they want to do it a la gold and like have gold reserves, like you can go and buy gold reserves now. Like just buy Bitcoin reserves now to the point,
because they're trying to collect, just like any technology, the minds and the people that harvest it. So if you have a government that is pro that industry, the people that are going to go be innovative in that are going to create new coins, going to create new blockchains, they're going to create the technology for it and everything. You want that to be fostered in your country, as opposed to not be. So if you have a government that is hostile towards it,
yeah, but then just set up like I'm all for setting up regulation to be pro Bitcoin, pro cryptocurrency, pro like that's, you know, when you talk about getting rid of Gensler, like I'm all for that to me. And it's not necessarily like he's got, as Mauricio kind of alluded to, that he's anti-crypto, but they've done an awful job of regulating it. Like no one knows what is going on. They don't know, is it a commodity? Is it a security? Is it no one knows. And that's the problem. Like you can't innovate in the space when you're not sure if the SEC is going to all of a sudden try and shut you down because you're dealing with securities. And so like he's done an awful job that way. And so I don't disagree that he needs to go. But like as far as us needing to have a Bitcoin reserve, I don't think that's needed. But I do think we need better regulation and less, honestly, like just clear cut regulation and let people, if you want to be the leader in the industry, like we're already America. Like people want to come here and they want to innovate here, and just make it easy for them to do it, and they will. So like to me, like if you want to be the leader in crypto and then have crypto be the, you know, America be the crypto capital, just make it easier for people to come here and do stuff with crypto.
And I think this is part of the issue, is that we conflate crypto and the technology behind crypto, blockchain, and the other technologies related to crypto with Bitcoin. And so for the most part, I didn't actually listen to Trump's speech. I read part of it, and I've definitely seen snippets. He was talking about Bitcoin. And certainly I think we need a president that is pro-technology, all technologies, whether it's AI, whether it's blockchain, whether it's any other technology.
Well, he hired the right VP then.
Sure. And absolutely, you can argue that's one of the benefits of JD Vance, because he's tied into that industry, and so whether that outweighs other things, I'll leave that to the user. But yeah, absolutely, I think that that's a big selling point for any candidate, is the fact that they're pro technology. But being pro technology is different than specifically endorsing one product, specifically endorsing Bitcoin, or specifically endorsing the Cybertruck, or specifically endorsing McDonald's, or whatever that product is. Endorse the technology.
Yeah, but you guys are still making, again, I want to defend this position because I think it's a valid one. So you guys are making an assumption. Everybody's making an assumption, and whether that assumption is correct or not, like the assumption is, if you look into the future, 50 years from now or 100 years from now, and let's say something like, maybe it's not Bitcoin, maybe it's Ethereum, maybe some other cryptocurrency that hasn't even been developed yet, but it's something that comes up now that 100 years from now or 50 years from now has the same weight as gold does today, for example. Like right now, there's a whole rush of people buying gold. There's some, even they're using that as potentially having some leverage. Like, hey, why don't we start trading oil and gold instead of dollars because of whatever? You want to be in a position to have gold. And the United States does, at least unofficially, it's the number one ranked country of gold reserves. It's got over 8,000. The next closest one is Germany at just over 3,000. Whether those numbers are correct, who knows? But we've got at least twice as much gold as everybody else in the world. Fast forward 50 or 100 years, if Bitcoin now is the same level as gold, don't you want to have a bunch of Bitcoin because everybody else has those in reserves and they could start suddenly trading oil or having free trade in some kind of crypto or Bitcoin?
Yeah, but why can't they just go buy it then? Like, why does it have to be now before we know? Like,
well, so why don't you just wait till then to buy gold? Why is everybody buying gold right now?
Because right now there is a strategic reason for owning gold. Like that's why they call it the strategic reserve. Right now there's no because Bitcoin is not a commodity like gold that's accepted across the world.
That's been tested and proven over thousands of years.
But if you believe as an assumption that 100 years from now crypto is going to be at the same level as gold, wouldn't you want to start participating in that today?
Yeah, but once again, that's an assumption. It's a bet. You're making a bet. And the U.S. government, the government doesn't make bets.
But you can argue that assumption later. But I'm just saying, if you're in the camp that believes that, then this makes total sense. You could argue the point, the underlying assumption. You can argue 100%. Like whether that's true or not, I don't know. But if you assume if you're a believer that 100 years from now or 50 years from now, Bitcoin is going to be a major player in the world financial markets, and there's going to be people holding reserves, and 10, 20, 30% of your reserves are not going to be in the dollar or the yuan or the euro. It's going to be in crypto or in Bitcoin specifically. Wouldn't you, from a national security standpoint, want to have some Bitcoin if you believe that in 50 years?
But who believes that? That's the question.
The United States, though, right now, gold reserves are worth $500 billion. Bitcoin's worth $2 trillion. So, I mean, I'm not saying we need to stock up on Bitcoin at all. I don't care. I believe we need to foster innovation, and I think the technology that runs coins and that is hallucinatory trade, we absolutely need it. We need to foster it. The rules are totally screwed up because the people that are making the rules don't know what's going on, yet they act like they do. Right? That's even worse, right? Like, I understand fundamentals of blockchain, okay? I understand the fundamentals. I don't understand, though, in-depth things like that, and I can tell you that those people don't know what they're talking about. It's embarrassing. So I think to Kyle's point, we have people making horrible rules. It's getting in the way. I think we need to clear all that out. And I think that as of the United States actually holding some in balance or not to try to control the limited supply of Bitcoin, it is a large value, right? It's not small, but I'm not necessarily thinking there's strategically stocking up on it. It would be to try to control more of this type of currency like they control and stock up on others' currencies. That would be my argument that I could see or want. I think it's way more important, though, the setting forth the landscape for entrepreneurs to build the future and doing that through rules.
Exactly. And to that point, this is the last thing I'll say on this. I agree with AJ. If we're going to spend $200 billion, $500 billion, $1 trillion on Bitcoin, well, let's take that $200 billion, $500 billion, or $1 trillion and spend it on fostering more innovation in general, which will benefit the country short term, today, next year, 10 years from now, as opposed to using it as a 50-year bet just in case Bitcoin becomes big. Because let me tell you something. If we can foster technology and we can grow our GDP and we can ensure that 10, 20, 30, 40 years from now, we're still the leading innovator on the planet, then as Kyle said, we'll have enough money that we can buy as much Bitcoin as we want at that point.
Can I just give one quick, and then we'll move on because I know we've got the not so top 10, which is exciting because I'm really looking forward to this not top 10 coming up. But I won't share the screen. But Geisler, before he was SEC commissioner, he was heading the CFTC, the Commodities and Exchange Commission. In between gigs, he taught a class. I actually watched the beginning of it. He taught a class at MIT You know what the name of the class was?
I love Bitcoin.
Blockchain and money. He knows, he's not like he's like some ignorant guy who knows nothing about blockchain and knows, like, he actually taught a course at MIT on this. So he's pretty familiar with it. I actually don't think he's been very he's just freaking.
I'm not saying, like, a lot of people want to go so far and saying he's anti-crypto.
I think he's been very pro crypto, to be honest with you, overall.
I'm not saying that he's anti-crypto, but it doesn't change the fact that, like, it's been long enough where he's been trying to deal with it, and we still are in this, like, ambiguous, like, area where people don't really know what the regulations are and don't know what to do. And to me, that's a failure of leadership. Leadership has to, like, you got to know what the rules. You can't have one of those things where you're operating under one assumption and you think you're following the law, and then the SEC shows up and says, "Hey, you're breaking the law." Like, it's like
100%.
Like
he's
just
regulating by enforcement. He's regulating by enforcement as opposed to just actually giving us the rules. He's doing it by enforcement. Actually, yeah, I'm with you.
I said I wasn't going to say anything else, but I am going to say one more thing. Trump did bring up the central bank digital currency, and I think that is a discussion worth having. It's a separate discussion. I think it would make a great topic on this show. So I'm going to
let's do that on the conspiracy show. It's
not even a conspiracy. I mean, I think at some point, again, whether it's next year or 30 years from now, we're going to have one, and not necessarily because it's a way for the government to control us. Certainly, you can take that attitude, and we can have that discussion. But just technology isn't going to slow its pace, and at some point, there's going to be value there.
Yeah, you think printing money is bad now. And, like, that's when it's all convoluted, where they have to issue, like, bonds, and the government and the banks have to loan it into existence. Imagine when we have a central bank digital currency and the government can just go.
There's no way you can talk about central bank digital currency without talking about conspiracy theories. Let me just go there.
All right. Well, let's do it as a topic. We don't have to do it next week, but we'll drum up some support for it. All right. Let's go for the from Mauricio's top 10, his favorite thing. And as we alluded to at the beginning of the show, we did our drawing. Jay and I did our drawing, and we've come up with the.
AJ and I had no say in this?
Well, it's just a random drawing. Like, it was like.
So if it was random, why is Jay and you involved?
Well, because
I gave him the list of people that reached out to me.
It's called drunk real estate, and so the point is the hosts are all going to be part of it.
Can we verify the results? Is there an audit trail? Is there, like, Price Cooper, whatever it's called?
I hate to say it, Mauricio, but unfortunately, you did not make the cut in the drawing. So
thank God. AJ and I are not in the cut. AJ,
AJ made it. AJ made it.
Can you imagine if we took our names out and we did a drawing of, like, 25 people, and all 4 of us just didn't make the cut, and we're like, okay. Here's a fantasy football league.
You're not getting out of it that easily, Mauricio.
All right, let's get into this list of the top 10 members of the Drunk Real Estate Fantasy Football League. And by top 10, I mean the only 10. So number 10, Mauricio, you're number 10, just because you've been so grumpy this episode about the top 10.
Dude, wait, am I viewed as the grumpy one?
Well, just about top 10s.
Oh yeah, for sure. Oh, that's yeah. If there was a top 10 of the top 10 people that were grumpiest about the top 10, I would be at the top 10.
Yeah. So that's why you're at number 10. Number 9, Elvin O'Neill. Number 8, Jason Ballara. Number 7,
Jason Ballara in the house. Sorry, I interrupted you.
Jay Scott. Number 6, AJ Osborne. Number 5, Joe Cornwall. Number 4, me. Number 3, Mark. I apologize if I mess anyone's name up, but Mark Oshiro. And then
I'm glad Mark made it, because when he sent me an email, he specifically mentioned that he was a Bears fan, and I don't know if that's going to trigger Kyle, but
that'll be fun.
I'm hopeful that it does.
Bears had a good team last year, and then. Number 2, Mike Nuss. Mike Nuss I'm glad he made it. He always texts us about our episodes after they happen. So he's a big fan of the show. We had him as a guest on here. And then the final one is Sid Bartak. So there you go.
Can I throw out another suggestion? Because I'm a bottle in. Can we have, like, a betting? Like, I want the audience to be able to bet on who's going to win of those 10, and we should have prizes, which are going to be all of the apparel that you and Carol are going to come up with over the next 6 months.
Oh yeah,
And
we're
then
gonna
we give away
we'll make it
prizes.
cool. We'll make it a thing. And I also I threw out this idea, and I'm gonna run it by the group where you always have to do something fun for the person who comes last place. And so like I had the idea that like whoever comes first gets to write a video script for the person who comes last, and they got to record that, and we're gonna put it as our intro on one of the episodes.
That works. I'm talking about outside of the top 10. So outside of the top 10 people who are participating, that the audience can then make bets on who's going to win or come in last or whatever, and then we can give them prizes for betting correctly.
And maybe this will lead to Drunk Real Estate getting an Instagram page. We'll have some
I
interactions.
thought. Wait, I've been tagging drunk real estate for the last year.
Yeah,
Is
we
that
have
not
an
a real
Instagram
page?
page,
Oh,
Kyle.
do we have an Instagram page?
Yeah, we do.
Who runs that? Do you run that, AJ?
I don't.
It's not you. I thought, Kyle. I thought you were running that page.
I don't think anybody's running. That
We just have a
page.
ghost page.
I keep tagging drunk real estate, and it's like great.
So anybody who is a social media genius that wants to run our Instagram page, reach out to me.
Right
Oh,
there,
so
Kyle.
Jay,
We're looking for
No
interns.
post.
There you
I was
go.
going to
We're
say,
looking
do we
for
have any
interns.
posts? Maybe I'll
No,
take
we
it
have
over.
no post.
I'll take it over. It'll just be.
Kyle
I've been
Wilson,
posting-
Jay
I've been
Scott,
tagging, like I'm
Mauricio, and AJ.
All right, maybe I'll take that over. Ashley's been wanting me to do an Instagram page. She wants me to do an Instagram page about how grumpy I am as a horse owner dad, because she says apparently there's an industry for that. All right, finally, game. The game I wanted to play because I had this debate with my family here. We've been sitting watching a shit ton of Olympics, and the debate was, what if you had to pick one Olympic sport that shouldn't be in the Olympics? It's gone. It's out of the Olympics. What would it be?
curling.
What?
Oh,
Curling is the
blas-
only thing that should be in the Olympics.
blasphemous. Blasphemous. You going to back it up, or are you just going to say because you don't like it?
It's the most ridiculous thing I've ever seen.
His wife makes him sweep the house, and it just every time he's sweeping, it reminds him.
AJ, you got a sport you get rid of?
Solo. What is it? Solo. Synchronized swimming. I think that was one.
Solo synchronized swimming.
That's just
Doesn't
that's
get
just
you-
one person in a
Exactly.
pool.
How? How's it synchronized? There's only one.
I don't think that's real.
Yeah, it's a real thing. Solo
No, it's
synchronized
not.
swimming.
I think you're thinking of. I think you're thinking of the beard growing. That's a different.
That would be amazing.
Yeah,
That
beard
would be
growing.
amazing.
Well, but like breakdancing's a sport this year, and so you're like, okay, like
You just stole mine, Kyle.
actually technically, Jay, you can't call that one because it's like a trial sport, so it's not a real sport yet. It's on trial, so it's not even part of the Olympics. But
I've
they
got a
do have.
backup.
Yeah, what's your backup?
My backup is it's because it's not a sport. Golf.
Ooh, wow.
Shots fired. You're gonna
See, I would- I would
upset.
argue. I would
Those are
argue
fight
golf
words.
shouldn't be in the Olympics, but for a different reason. Not that it's not a sport. Is I don't like when there are sports in the Olympics and the Olympics isn't like the epitome of the competition in the world. So like golf, the best golfers already are on PGA Tour and Live Golf and play in the major tournaments. No one's watching the Olympics over the Masters. So to me, that's maybe why you shouldn't have it.
So you should get rid of soccer. Is that another
Basketball.
one? Tennis?
Yeah, actually, so it's a little bit different there though, because when you are like, it's not so dominant in like if it's not a domination in one. So I'll use an example with golf. In the golf Olympics, there's only 4 Americans allowed to compete in the Olympics. But if you look at the top 20 golfers in the world, at least over a dozen of them are Americans. So like it's like you're not getting all the best competition. You're having a bunch of just like mail-in votes. So like I get something like soccer, but the problem with soccer is you already have like the World Cup, right? So like are people going to watch this over the World Cup?
By the way, don't forget that the Olympics used to be amateurs only. They wouldn't even allow pros until 20, 30 years ago.
Right. But now they do. So now they do. So when I go, I'm expecting to watch the best in the world. And like the soccer and for the Olympics right now, it's just like an under 23 league now is basically. So, but I'm gonna have a controversial take on this, and I argue with people all the time.
Swimming?
The amount of swimming events is ridiculous. It is like you can watch swimming all day, and the fact that someone could get like 12 and be 12 different things and possibly get 12 different medals is absolutely absurd to me. Where it's like, oh, we're going to do the 100 we're going to do the 100 free. Then we're going to do the 200 free. Then we're going to do the 400 free. Then we're going to do the 800 free, and then the 1500. And then, we're going to do the 100 relay free, and we're going to do the 200 relay free. And it's like how many different ways? And then they do it for every single stroke as well. Like, it's just absolutely ridiculous to me. Like, just to me, there should be just a bunch of overall, like, who are the best swimmers and make them do all the strokes. And it shouldn't be every
dude. I will take the complete opposite of that one. For two reasons. There's two main reasons. Number one, you just mentioned the reason. Like, if you think of swimming, the ultimate pinnacle is the Olympic sport. Like, there's no, like, even the world championships are cool, but it's like track and field. Getting an Olympic medal in swimming is the ultimate goal, number one. And number two, for you to compete in all those events, do you know the amount of physical freaking gangsta you've got to be able to do 5 events and medal and get a goal? Like, Michael Phelps got how many medals, or Michael Spinks, or whatever these guys' names are, 6 or 7 medals in Olympics. Do you know what kind of physical, athletic shape and commitment? Like, that is like the epitome of Olympic status, is when you are a swimmer and you can do 8 events, win of them, and the amount of stamina and endurance and training that you have to go through, it just epitomizes the Olympic spirit.
But like the fact that you have 100 and 200 and 400 of the same, even of the same stroke, and then you do every other stroke. Like, what if we for basketball?
Do you have any idea how much energy you expand on doing the heat number 1, heat number 2, semifinals, finals, and the times 12?
Take it offline.
Mauricio, I know how much it's not disrespecting. It's just like, what if for basketball, you're like, okay, we're going to do 5-on-5 and 3-on-3, and then we're going to have a foul shot competition, and then we're going to do a 3-point shot competition, and then we're going to do a relay passing thing, and like we're just going to do every little aspect of that sport is going to be a medal on it. To me, it just gets ridiculous.
How about this? Let me bring us all together with my Olympic take that I think we can all agree upon. The fact that they have gotten rid of the women's beach volleyball players wearing bikini bottoms, and now they're all wearing long leggings.
I didn't know that was true, and I'm out. Like, I didn't realize
I'm out. For that reason, I'm not.
I heard that was the main reason.
Who made that decision?
Yeah.
I don't know, but see, I knew it'd be something we could all agree on.
Yeah.
Wow, they can. To me, they could just wear whatever they want. If they want to wear that, then they can wear that. If they want to, like, to me, the uniforms.
Right, of course, if they want to wear it.
They should made to wear anything.
Are they forcing the men to wear tank tops and wear like full sleeves? Is that what they're?
Yeah, the guys got to wear full sleeves. They don't want to show off those biceps.
So basically, what AJ's wearing is what men are going to have to wear at the next Olympics.
Full suit.
And yet, but the thing is, and yet the swimmers, like, you send the men's swimmers out there, and they basically wearing a string G-string. So, like, to me, like, wear whatever's going
to. They need to bring back, though, is dueling. We need to get dueling back.
Well, they have fencing. It's kind of that.
No. He means with guns.
Gun dueling.
Okay.
Like pistols.
I agree.
I mean, that would be kind of cool. They could dress them up.
Viewership for the Olympics would skyrocket.
Are we talking live ammo?
Of course. You just put them in big suits, right? You put them in the protective gear, like one of those bomb suits, and
it's like who can do that and fire and just hit the tip of the ear? Like, whoever does that would be the winner.
The crazy thing is, you know how much money you could save on medals by doing a dueling thing, because you only have one medal.
There will be no second or third.
There is no second place.
That's my favorite insult used to be like when you said to someone that you look like the runner up in a shovel fight tournament. That was always my favorite, because that idea that you made it all the way to the finals.
That sounds like a Canadian thing.
Oh, it's a great insult. All right, let's wrap this up. Mauricio, you got a plug for us?
Yeah, I'm going to plug Real Estate Syndicate Alive. We are moving. We are moving after years and years and decades and centuries from Mondays to Tuesdays. So starting next week, Real Estate Syndicate Live, where we talk all things real estate syndication. It'll be on Tuesday at 11:30 a.m. Pacific, as opposed to Mondays. So stay tuned. You can go to realestatesyndicatedlive.com.
That's great. Now you can get Mauricio almost every night of the week. AJ, what do you got? You got a plug for us?
You know what? I'm going to plug the book. Growing Wealth and Self-Storage.
Oh, I'm not home. I don't have the book next to me. Sorry, buddy.
Dang, it's okay. Oh, my man Mauricio comes in with a win, and look at this. Who's coming? Who's coming? Woo! You, Jay, you can do it. I believe in you, Jay.
You can do it.
Come on, like I gotta get the camera on me. Like the come on, Jay. Where are you, Jay?
This is love right here. The support. Boom! And he did! Jay! Oh!
Wait, did you?
Oh, thank you, boys. Warms my heart.
AJ, when you were picking the color for that cover, did you say I want the Costco blue? Because that's it matches Jay's shirt.
Wait, AJ, though, AJ, I have a quick question though. When people buy AJ, when people go to Amazon and they order Growing Wealth and Self Storage 2.0, do they also say customers who bought this bought legal strategies for everyone from Mauricio Rauld? Or
it is absolutely an add-on.
All right, cool.
It's like commonly bought, commonly
sure
purchased, and then the next one's Jay's book.
Well, they should do like on the bottom, like bought together. They should put all 3 of your books.
Yes.
But when it comes to Jay's though, it says people who bought this also bought a rope and a chair. I don't know if you know that. That's the other one that they do with Jay's, but I don't know.
Wow.
In a plastic bag. Jay, it's your plug time. I don't know if you want to use it to insult Mauricio or actually plug something.
I'll plug Real Estate Syndicator Live.
Oh, taking the high ground.
Hey, when he goes low,
you get high.
You go live.
Yeah, definitely. If you haven't checked out Real Estate Syndicator Live, the host is dry, but sometimes he's got some great guests.
Dude, I got your episode up there right now on the YouTube channel, and it's like crushing because I got it like highlighted because it's all about underwriting, and you're like a pro. I mean, nobody else on this panel is anywhere near as qualified as you are as to underwriting, and so that episode's really taken off. And so if you want to check out Jay Scott's underwriting masterclass for free. Don't pay for it. Don't go to his stuff and pay for it. Go to my YouTube channel and you'll see his episode prominently displayed.
Awesome. I'm going to plug our fantasy football league because it's going to be awesome. And I'm going to plug my wife at Badash Investor on Instagram, YouTube. Yeah, because she's awesome. She's cool.
Okay, longest episode ever. Let's get out of here.
All right, let's wrap this up. We all back next week?
Yep.
Oh. Next week, I'm in Brazil. I'm planning on it, but I do
have
have
internet
to
in
make sure
Brazil.
my
They have internet in Brazil.
They do. That's why I said I'm planning on it. But I just got to make sure all my times are
But instead of wearing
correct.
the sweet jacket, you're going to be wearing a bulletproof vest.
Well, dress the part. You got to show up in some cool outfit, some Brazilian outfit or something.
Hopefully they have better internet in Brazil than they seem to have in Canada.
I want to see a headdress, shirtless with nipple tassels or something. All right.
Oh yeah. I'll bring Carnival for you, man.
Yeah. I'll hold you to it, AJ. So I will see you all next Tuesday.
See you guys.